Alibaba just announced that they're going to be hosting their virtual 2021 Investor Day on December 16th and 17th. And upon receiving that update, a lot of investors are absolutely salivating at the potential for great news. So this should be a positive announcement, right guys? Not so fast. In my opinion, there's a lot that can go wrong here, and I'm more nervous than optimistic. That's what we're going to dive into in this video after you guys be so kind and smash that like button. You're watching More Money? Let's get it. So Alibaba just announced that they're going to be hosting their virtual 2021 Investor Day on December 16th and 17th. And I posted it in the YouTube community tab where I sort of wanted to gauge your guys' interest on it, and 50 of you liked that post right away. So I wanted to sincerely thank you guys and give you a gift for interacting with the post, which is this professional level preview of the Investor Day. Alibaba's Investor Day is very long. It's over 2 days, and you already know that I will be listening to every single minute of it, and I will be providing you with relevant updates in my style of quick 2 or 3 minute videos. So subscribe if you already haven't done so. And I know based on my analytics that 90% of you guys aren't subscribers. I'm watching you. So please do me a favor and subscribe so I stop crying myself to sleep at night. So the first takeaway that I got from the announcement is that all three leaders, Daniel Zhang, their CEO, Maggie Wu, their exiting CFO, and Toby Zhu, their incoming CFO, will all be at the presentations. It's very good that all three were specifically named in the press release, as it shows a cohesiveness to the leadership transition. Recall guys that Maggie is stepping down from her post and Toby will take over. Now, I've been following Baba very closely throughout the year, as it is my largest equity position, and there are a few items that I will be looking out for specifically, which I'll go over in this video. The first and most important item will be the update on the strength of their domestic China retail marketplace business, which is referred to as their China commerce retail business. Specifically, I want as detailed next year guidance on their customer management subsegment as possible. Recall guys that the year-over-year growth in this segment slowed to 3% in the last quarter, and is partially the reason why the stock sold off. There are two very important concerns that I have here. The first is that they mentioned in their quarterly results that the customer management subsegment grew at 3% primarily because of slowing market conditions, and 2, because of greater competition. So I want clearer guidance on both. What exactly do they think the greater competition looks like, and what are they expected to do to address the issue of a more competitive China e-commerce market? It is not okay if you're telling me that the market is more competitive in your Q2 results, but in your Investor Day, you're not telling me that you've come up with some form of strategy to address it. This is a big deal, and I think most people are looking for answers here. The other part, of course, is that I want them to elaborate on the slowing market conditions that they identified in their Q2 results. I would like to get a better idea of what they think the strength of the domestic Chinese consumer is. They may want to touch on any of the lingering impacts from the Chinese rollout blackout power crisis. I think that's largely addressed now, but you guys let me know in the comments if that's still ongoing. Also, are there any impacts from the potential housing market slowdown led by the slow collapse of Evergrande? Finally, are they seeing any impacts from increased COVID measures to their results, and how might we want to be thinking about this going forward into the next year? Overall, I know that they don't have a crystal ball, but I would like some somewhat reliable guidance into the next fiscal year here in this subsegment. And this here is what I think is the make or break for the Investor Day, and I'm almost certain that they will address these questions on day one. I'm just personally not sure how good those answers will be. The other item that I would love to have addressed on day one is how should we be thinking about their ongoing investments into merchants that hit the P&L. Recall guys that their P&L got impacted because they've been investing into merchants in both Q1 and Q2. I would like to know how I can forecast this, and I hope that they can be a bit more clear on this, as I'm almost certain that they have a budget already set aside for this due to it being a somewhat discretionary expenditure. And honestly guys, if they don't touch on that, I'll be very disappointed, and it's something that I'll definitely bring up as a downside from the Investor Day on this channel. And to be honest guys, I also may further reduce my profitability forecast for this segment, which may push my valuation down into the 200s from where it is right now in the low 300s. By the way, as 90% of you guys are new to the channel, please note that I give away my research model on Alibaba for absolutely free, no strings attached. So go ahead and grab it from the description below, and please don't forget to smash that like button as a thank you for the work. Okay, moving on. You'll recall that they recently separated out the international e-commerce segment from the Chinese domestic business. I was very excited about this, as I may be able to obtain better disclosures on how I can be thinking about the growth in the international business. This is a key pillar for growth for the company, along with the domestic e-commerce business and cloud computing business. But it's also the one pillar where they haven't given the best guidance. Specifically, I would like to know what the strategy is for Lazada, their Southeast Asia e-commerce business. You may recall that they have been investing in merchants here to drive up customer stickiness and sales. So I would like to know if further investments are needed and how I can forecast it. Alibaba has not talked about this yet, but I would like for them to touch on what impacts, if any, are they feeling in Turkey from the current currency crisis. Recall, guys, that they mentioned that Trendyol, Turkey's largest e-commerce brand and an Alibaba subsidiary, had a wonderful Q2, but I'm really concerned with the back half of the year with this business. Finally, overall, touching on the back of the lack of real detail and guidance on their international business, I would really like for them to provide a 5 to 10 year plan. Give me a playbook of how you're looking at the business overall. And I know they have an egghead internally who has built out that model, so they definitely have an idea of the answer. I hope that they let us know with at least some loose guidance. What I'm really looking for here is for any credibility to their international expansion strategy. Only that will allow me to take up my growth forecast for their international e-commerce businesses. Recall, guys, that despite the serious outperformance of the international business year to date, I have not taken up my medium-term expectations because management hasn't given me anything to work with. So I just have to say here, come on Alibaba, help me help you. Now, management is in an interesting situation where they have a collapsed share price into the $120 per share area, and I bet internally they're valuing themselves in the $300 to $500 per share range. So how might they be thinking about deploying their cash hoard that's currently sitting on the balance sheet? A little insight into the way that I think about this, I was actually getting excited about Alibaba's share price going sub $100 a share because internally I would be kicking down the CFO's door to turn on what's called an at-the-money share repurchase strategy, where they just have a brokerage buy back any share up until a specified dollar value. Buying back shares at values well under intrinsic value is absolutely accretive, and it's something that Warren Buffett has employed over the years at Berkshire Hathaway. Essentially, they buy back shares when the price dips below what they feel is conservatively under intrinsic value. So that's also why I didn't budge, and I don't care that I'm underwater on my Baba share purchase. I'm in this for the very long term, so as long as the company's operations continue to operate at world-class levels, I'm in this. Now, I want more insight into the China direct-to-consumer business as well, specifically Ele.me, in light of the new regulations. Recall, guys, that the Chinese government does want gig economy workers to earn at least minimum wage, and that's something that's difficult to ensure with the Uber Eats, DoorDash type business model, so I'm interested to see what they come up with. Now, you might recall, if you're an older viewer of this channel, that in the spring of this year, I actually became an Uber Eats driver and did around 250 deliveries to see how much you can make and thus save per hour in an effort to increase your annual investment savings. I concluded that almost everyone can reach their investment ambitions over a 10-year time horizon, working an extra 15 hours a week. So I have a very detailed understanding of how these apps work and how difficult it is to ensure that drivers earn the minimum wage. Personally, I found that I was making way more than the minimum wage based on certain actions that I was taking, which came from the experience I was getting as I did more and more deliveries. Chinese government intervention here can really screw up the business model overall in China, so you can really see why I'm curious here. There could be bad news on this front. This is one of those situations where the Chinese government is really trying to do something good for people, but sometimes the road to hell is paved in good deeds. Finally, what everybody's interested in is cloud computing. Although cloud is doing well, you guys may recall that Alibaba's cloud business is underperforming top-line growth relative to its US peers. So I really want to know how I should be thinking about profitability in the medium to long term. And of course, they might not touch on this. I would like to get some guidance on a potential Ant IPO. I don't know if they will get to that. Hopefully they do. Overall, will there be good news? Absolutely there will be, and I think the share price can go higher here, but I have some very real and relevant concerns which I'm not entirely confident that they can fully satisfy. We'll wait and see, and of course I will completely inform you of whatever comes up. Now, the one thing that you absolutely need to do is get a refresher on their Q2 results, which have now been out for a couple of weeks or so ago. And here's where I have you covered. I did a 3-part series on their Q2 results, which you can grab right here.